What is up, YouTube? Welcome back to Stocks by the Numbers, and as per request of a gentleman in the Discord, he wanted us to take a look at Flux Power Holdings, ticker symbol FLUX, listed here on the NASDAQ. Now, right now, the stock trading $4.76, down 20 cents, just about a 4% hit today. But in my opinion, this may be a situation where we may have to deal with some short-term volatility before we run into some long-term growth here. And there are a few issues, a few potential red flags that, in my opinion, we may have to keep an eye on. But overall, the growth in revenue here really cannot be denied. So this is why we may have a good long-term player here, in my opinion. Market cap right now, as you see, sub 80 million. So we're dealing with a cheap stock. We're sub $5 a share. So this could appeal to a lot of potential smaller investors or any longer-term traders out, investors, not really traders, but longer-term investors out there who are looking for something potentially over the next couple of years to try to get in at an early low valuation. And we can see on the EPS side, the last couple of quarters, the company has been struggling, 3 misses in a row. However, look at the growth in revenue here annually. It really cannot be denied, going from 9 million up to almost 17, 26, 42. As of last year, 66 and a third million for the year. And look at that net margin percentage as well, climbing very nicely with it. Was minus 100+% at one point and has consistently risen with the growth in revenue, now sitting at only minus 10%. So honestly, in my opinion, for a company like this is a company that does like lithium ion energy, rechargeable lithium ion energy storage systems for industrial applications. If you go to their website, you can see they have a handful of brand name clients right now: Delta, Pepsi, Caterpillar, right? So this company's slowly spreading out their footprint, and usually with a situation like this, once you get some Fortune 500 companies like your Pepsis and whatnot, then obviously the word starts to slowly spread, and then you usually consistently keep signing new clients with new companies. But obviously only time will tell. But the revenue has been climbing nicely. Just going back here, just, the last couple of years here, you can see we're at 6 million, and then we come in here 7, then we just jump up to 13. We start annihilating estimates. Look at this, over 15 million on estimates of 12, almost 18 million on estimates of less than 12. Again, they posted 17 million, estimates of 14, right? Then we begin to slow down a little bit. We posted a touch over 15. Estimates were up here at about 16 and a third million. So the company missed by a chunk right there, over 7.5%. And then the next quarter, they bounce right back. Estimates up here at 15.7. They post over 16. Estimates pull back slightly here to sub 14 million, but the company posts almost 14.8 million. And then you can see for last quarter, just a slight miss by about 1/3%. And the company, even though they technically did miss earnings, they still maintained that 18+ million mark, and that was a record quarter for them, and estimates were even higher than that. So in my opinion, I really wouldn't beat the company up too much off of those recent numbers. And we can see that the numbers came out here, and you can see we were dipping down, and then you can see as the numbers came out, the stock shot up and ran to almost $6 a share up there. So that's why the consistency, in my opinion, when you're starting out with a smaller situation like this, with a smaller company, what you want to see is, yes, of course, you want the company to beat earnings, but it's almost something similar to a SoundHound, right, that we've seen, where technically they did just miss revenue by, a couple of 100,000 or whatever it was, just like this company did, right, missing by 60K. But in my opinion, it's the consistent growth that they're seeing in revenue. It's the future growth and projections that they're laying out down the road. And of course, it's the clientele consistently being added to their Rolodex, if you will. But here with earnings coming up, I mean, obviously it's going to be a little hard to tell here, a little hard to call, in my opinion. Still expecting a loss of about 9 cents. After that, it actually is forecasted to start ramping up very nicely. And we can see estimates here, 15.475 million. So if we go back this time last year, you can see right here the company, this was the miss here, and the company was expected to post 16 and a third million, we'll call it, and they ended up posting 15.08 million. So now, year over year, revenue estimates chunk down, right? You can see we were 16.33, now estimates coming in 15.47. However, at the rate at which the company has been growing over the years, again, I would expect some misses like this to come in. However, they did post over this 15 million mark, and then since then, you can see 16, you had the dip down here in the September quarter, and then we bounced right back to above 18 and had a record quarter. So, unfortunately, we know earnings are a gamble, of course, highly speculative situations. But in my opinion, I guess I would probably give them the benefit of the doubt. But either way, it may not be a bad situation to start building a position in if you want to be a longer term investor. Again, because the revenue has been climbing nicely, and even though the debt is up, we'll look at it in a second. Again, the company brought in a little over 66 million for 2023. Right now we have a market cap of 78.7 million. So of course, at any moment we know that stocks could go lower, markets could start correcting, we can sell off. This stock, in my opinion, if markets do really start correct and sell it and start to sell off, in my opinion, you could definitely see low threes. Even if you come back and look at these trend lines here, a lot of these channels that I drew out, you can see coming down here, this is connecting the bottoms of October 4th, 23 to December 12th, 23. See how we've kind of been in like this sideways channel here? You can see I just drew that trend line, kind of connecting across the bottoms there. But you can see if we were to break immediately and come right down here, look at this, you're talking 320, 322, right? So if markets do really begin to sell off, and we can see some recent support levels here that I drew out, in my opinion, if we potentially start to break level by level, again, we could potentially retrace to this fib here, 383. We had that explosion after earnings we just spoke about, and you can see we hit that top trend line, almost got to that fib, and then we immediately rejected and started to pull back here to 383. So in my opinion, if this stock does come back down to even the mid to high threes, in my opinion, it could potentially be justified, but I want to look at the numbers here. So, revenue been climbing nicely. As you see, annual revenue estimates have been surpassing expectations here for the last 3 years in a row. On the quarterly side, 2 misses, 2 beats, but again, that was their best quarter so far, posting 18.34 million. We can see on the EPS side, we have 2 misses and only 1 beat, and as of late, the company has been struggling on the profitability side. So that's why this may be a situation where in the short term, you may have like that initial run up after earnings if they beat on the revenue, but if they missed on EPS, it might, eventually just give it right back. So it's going to take a little bit of time. However, again, the net margin has been climbing closer and closer towards positivity as the revenue has been consistently increasing. And if the company just had, a record quarter, in my opinion, I'm sure, I guess if I were a betting man, I would say, in my opinion, probably inside of the next 1 to 2 years, the company would be able to hit whatever it needs to, that 80 million plus mark for annual revenue, so that they're able to turn it net income positive. But the debt has been climbing here over the last couple of quarters, and in my opinion, that could be viewed as a red flag, as you see, going from sub 10 million up to almost 14, back down to 13, up to almost 15, as of last quarter, 16.3. Now, is it a massive big deal? In my opinion, not really. However, you really don't want to see this number trending in that direction. But also on the flip side, you could say that they're utilizing these debt dollars accurately, because obviously they just had one of their best quarters. So I don't know if that would necessarily be a big red flag, but we do have assets outweighing liabilities. Total assets sitting here, at like 35 million. And the company brought in 66 million. Actually, wait a minute. Hold on. If we look at the equity here, we can see the equity has come down almost 50% from where it was in Q4 of 22, in my opinion, red flag. But you can see the equity down here at 7 million. And we had annual revenue of 66. So, like, hypothetically, if we wanted to do some quick arithmetic here, we can add up the equity with the revenue, and we'd be at, about 73.5 million. But the company's got 16 million in debt. So that would bring it back potentially to 57, 58 million, which would be about maybe a 20-25% haircut here which would be about a 0.20, which would bring us back to 3.5. Didn't right? See, so in my opinion, that's why, sometimes the way I look at it, again, I know a lot of people may not agree with me, and of course that's fine, because regardless of any strategy that anyone has, no one is ever 100% correct. We all know this, whether we're talking, how millions of followers, all these subs on your channel, how much you charge other people. It really doesn't matter. No one is right 100% of the time. We all know this, but I am right a lot of the time, and I think that is because the numbers are more relevant than people think. And I know we're in this whole trading era and everything is electronic. So everyone's looking for these quick trades. And of course, if it works, more power to you. I wish everyone the best of luck. But when we're talking about like full longer term outlook here on a stock, in my opinion, it is really all about the fundamentals more than the technicals. But again, some quick arithmetic right there. You can see I came up with about 3.5. But that's what I'm saying. If we take the revenue they're bringing in, add up their current equity, and then we deduct any negatives like the debt that they're holding, like what is that value? Again, it was about 58 million. So that's why we could take potentially a 20 million haircut off the market cap, maybe worst case scenario in my opinion, which again would bring us down to about 350. That's why I'm saying if we potentially started to break some of these trend lines and we drop back down to like 380, and then we fast forward a couple of months, all of a sudden the stock's like down here at like 365, in my opinion, that would actually make sense. But again, over the longer term, I do like this one. I do like the way they're growing, and apparently they're bringing something of necessity to the table if they consistently keep signing up new Fortune 500 companies. But let's go back here. We can see, yes, revenue climbing very nicely. Cost of goods, we can see, look, now it's back in line. Q4 of 22, they brought in 15.2. It cost them 12.5. Now they're bringing in 18 and a third. It cost them a little more than 12.5. So we're starting to slowly get our costs in line here, and it looks like we're becoming more productive here to generate our revenue. Gross profit, total revenue minus cost of goods sold yields gross profit. You can see that, for the most part, slight dip there, but for the most part has been consistently increasing. Gross profit minus operating expenses yields operating income, and you can see, look, we were negative 2.5 million, slowly climbing up, getting to the low 1 millions, back down to minus 1.7. Now, as of last quarter, only minus 365,000. So this is why, if this company could start now slowly inching up these milestones, right? Now they, back then they were maintaining like 14, 15 million. Then they jumped up to like the 17s. We had a slight dip down. Boom. Now we have a breakout quarter up to the 18s, right? So moving forward, if we can kind of like maintain the 17, 18s, and then we'll jump into the 19s, the 20s, right? You understand? Obviously, if everything goes according to plan, in my opinion. But, in my opinion, that's a good sign. Switch over here to the balance sheet. This was one of the red flags I was speaking about, right? Going back from Q4 of 22 here, you can see total assets a touch below 31 million on liabilities of around 17 million, we'll call it. And the assets jumped up here to 37, started to drop down a little bit. Now we're back up to 37.6. However, you can see, look at the jump in liabilities here, almost 100% here, going from less than 17 million to 30.3 million, we'll call it. So the rate at which the liabilities have climbed to increase assets by roughly 7 million and change, we'll call it, the liabilities are outweighing the assets, and that's why we also saw the debt increasing. As you see here, total debt back here was 7.75 million and has been, for the most part, consistently, slight dip, but for the most part has been consistently increasing. And of course, assets minus total liabilities yields total equity. And we can see our equity was up here at 14 million. Now we're down to half that, at about 7.33 million. And what does that do? That affects our book value per share. As you see, 87 cents down into the 70s, the 60s, the 50s. Now we're in the mid 40s. So if this trend continues, a sell-off will become more justified, in my opinion. But again, the company does seem to be growing pretty nicely, trading a little over 1.25 times sales. That's actually the highest we've been going back the last several quarters. Price to book now is above 11 times book, again, because book value just dropped to 45 cents. So we're trading over 10 times book value. And enterprise value, though, interestingly enough, again, this is what another company would be willing to pay to buy out this stock. As you see, it's about 18 million more than the current valuation of the company, which is why I'm saying, in my opinion, I really don't look at the enterprise value, but I know it was the next one on the list, so I figured I'd just mention it. But in my opinion, there's growth here, right? That's what I mean. We can see it. We saw the revenue growth over the years. That's why there's value here. There's growth here, in my opinion. Which is why, again, if you begin to start buying 470, 450, and then it dips down 380, 360, this is why I always say, in my opinion, you are much, much better off piecing in and slowly averaging into these positions over time if you can. And, wait for those dips, scoop up a little bit more, ride it out. And then if there's a big market correction and you see that stock is now like back to where it was, let's just say, boom, now you step in, you add a couple of more shares. So that's why I always say, try to get these stocks, in my opinion, at fair or undervalued, right? When it had that run up to like $5.80, $6, in my opinion, that may have been a little high for the shorter term. So if I looked at it that day, I may have even just came to a simple conclusion in my mind to just say, well, it's up here at 580. It was just down at, 380. So let's wait for like 480, 470. And look, now the stock's down 476, right? You understand what I'm saying? That's why one of my personal rules is try not to force your way in, try to be patient. But that's just my opinion. But the return on assets, as we see, has been climbing very nicely here, getting towards flatness. Return on equity, return on invested capital, seem to be moving in the right direction. The gross margin percentage has been consistently increasing as well, though, as we see, sub 18% getting into the 20s, high 20s, slight pullback, and now back up here at almost 29.5%. The operating margin was minus 16+% back here. Now we're only at about minus 2%. EBITDA, again, earnings before interest, taxes, depreciation, amortization, was down here, minus 14.5%. Now we're at only minus 0.5%. And the net margin we were looking at before, we can see we were down here in the high negative teens and even pulled back recently to minus 14. But as of right now, we're currently sitting at less than minus 4.5%. So that's why, in my opinion, it really looks like this company just kind of has to hit like that 20 million revenue mark for the quarter, and that may potentially be the level to where we could see some flatness or some potential net income positivity. And then, in my opinion, the stock may take a big leg higher on that news, whether we feel it's justified or not, because it is good news. Inventory turnover was climbing, pulled back to 4, back up, pulled back down, okay. Asset turnover got up to almost 2, pulled back, but it's technically up quarter over quarter. I don't know if I would really view these metrics in this current state, in my opinion. And I know I always look at them, but I don't know. I don't know how heavily weighted they are here at the situation. But of course, our debt ratios, our debt ratios have been consistently increasing. We looked at that debt climbing here over the last couple of quarters. But we can see as of late, the company's been struggling on the EPS side. But look, moving forward, we can see this next quarter expecting a loss of 9 cents a share again. But then after that, a loss of only 2, a loss of only 1. And then we're expected to go positive roughly halfway through 2025, which is why I'm saying again, if we could potentially begin to accumulate shares and build a position here and deal with any short-term volatility, we could potentially see some really nice long-term growth here. And look, what do you know? They're expecting positive EPS of 4 cents Q2 of 25. What are the forecasted revenues coming in? Over 20 million, 21.2 million. So that's why I'm saying, in my opinion, it looked like that net margin percentage was really inching up here. And again, seeing 66 1/3, they lost 6, negative 10%. Right, we add those up. Now we're above 70 million. That's why I was saying, in my opinion, if they hit that 20 million mark, which would be roughly 80 million extrapolated over 4 quarters for the year, then chances are they would probably be net income positive, and the company is forecasting that roughly halfway through 2025. But after these estimates drop back down here to sub 15.5, this quarter coming up, we can see after that we're looking to jump back, which if we get even close to this number, that will technically be the new record revenue brought in for the quarter, right? And then pending the growth that they see quarter over quarter, they could potentially consistently hit these record numbers for the company. So only time will tell. But again, after that slight dip, it looks like revenue is going to jump back up and stay up to that 18 to 20 plus million mark. So again, in my opinion, of course, anything can happen, but I will say they do seem to be bringing a relevant product to the table in the space because, again, they consistently keep signing these Fortune 500 clients and the revenue consistently keeps climbing year over year. And there's not an immense amount of bleeding like we saw with maybe a company like Luminar Technologies, right? LAZR, right? That company had a lot of bleeding, a lot of losses quarter over quarter, regardless of how much revenue they were bringing in. Here we're seeing kind of the exact opposite situation. We're seeing consistent increases in revenue over time. As the revenue goes up, you're seeing that net margin get less and less negative and then keep clawing towards positivity. So that's why, again, of course, at any moment we could break, we could drop down to this, 3.25 mark here at this bottom trend line. But overall, in my opinion, shout out to Whittler95 in the Discord because he's the one who asked me about this situation. And I know I'm late, but I figured I'd take a look. But let's talk about a couple of these trend lines real quick. And we can see, again, this is going from the top of January 13th, 21. And I just connected it down to that recent run up here after these last quarter earnings. And we can see, I think that was, February 15, 2024. That's the blue one. And I went from the bottom here of May 24, 22, connecting to that bottom right there, December 12th, 23, and just kind of drew that across. So those are like the longer term, again, going back to the highs of 21 to the lows of 22. So those are our really long term, like top and bottom trend lines. And then I started to draw out some more recent ones, right? So it looks like we topped out here February 13, 23 to March 9, 23, and I just drew that trend line across in red. Then I went from that top in March 9, 23, and just connected it down to the more recent top again, back there on February 15, 2024. Now, again, of course, a lot of these trend lines may not be 110% precisely accurate. However, drawing out the trend lines like this, in my opinion, from the highs and the lows and just kind of mapping out some of these levels, it could potentially show you what levels we have to watch, what levels we're potentially about to break, higher or lower, and where we can go afterwards, right? So again, as you see, after the run-up of last earnings, we immediately came down and tested that fib. So in my opinion, this fib level right here of around 383, this is a key level. And that's why I'm saying it looks like we may have posted up here recently, and we could be consolidating downward into this flag. So we could, of course, pop up here to maybe like 5.5 and touch this trend line soon. However, this is the more recent support trend line, as you see here, just connecting the bottoms of the recent candles, March 19, 24 to March 20, 24, connecting to that bottom there of April 2nd, 24. So you can see if hypothetically we were going to begin to pull back, first we're probably going to potentially bounce off that 20-day moving average, but then you can see if this happened just in the next couple of days, you can see April 12th, right, we're looking at about 445. Now, again, these aren't 100% accurate. However, by doing this way, in my opinion, and then, extending them out indefinitely, it shows you some potential levels and prices to keep an eye on. And a situation like this, a lot of people hate on trend lines, but a situation like this could help you out in the trading as well, right? Because if we do have a bull flag setting up and then we pop out, all of a sudden, you wake up and you're at 540, at least you have kind of an idea like, okay, we can hit maybe around 5.5. So if we hit like 545, 546, I'll sell and I'll take profits off the table. You understand? Of course, we're never going to buy at the absolute bottom. We're never going to sell at the absolute top, but it is nice to try to map out where a stock could go so that if you're involved, at least you have some sort of idea. But also, this looks like a key trend line as well here. This is going from the bottom of May 24, 22, connecting to that bottom right there, July 15, 22, which connects to that bottom of August 31st. And you can see, of course, as of late, it kind of cuts right through the chart. However, if you zoom in, you can see that this was a key level, and as it crashed down and broke here in April 23, it immediately popped up and regained that trend line. And then you can see it came down to try to retest again and had a bounce, and then almost tested again and then had the big bounce. And you can see as it came down here, look at this. This was like 2 weeks that it bounced and stayed above this trend line, had a big pop up and then broke down. But you can see it immediately tried to retest and then rejected, right? So this appears to be a key trend line as well. So that's why sometimes I like to just draw out trend lines, because you never know what you might find. And we can see here as well, we had the retest, and then we bounced higher, and then we came down to test, tried to hold, and then rejected, and then went back above, and then came back down below, and then rejected, right? And then we tried to come up, rejected. We tried to hold, but then we fell. We tried to retest, but then we fell. And then once we hit that level, we took the next leg higher, right? You see, this is why, in my opinion, I like trend lines. And then you can see that again, we came down, we bounced off of it a few days before eventually breaking, and that took us all the way down to this fib. And now here we are again. We can see we almost retested. Looks like it would have been about, yeah, like 5.5, 551, 552. And this stock right here hit a high of 546. So only time will tell. But again, if it's potentially setting up the bull flag, it may be, you know, consolidating downward here. And now, boom, getting ready to pop from 476 up to 550 before potentially rejecting again and coming back down. But in the shorter term, again, just over about the last, looks like 3 weeks, you can see I drew this trend line across here connecting a couple of these bottoms. So right here, in my opinion, is your short-term support. And, you know, even if we go out the next couple of days, it looks like, yeah, maybe around like 445, 447. That looks like a key level the stock has to hold. But we have to see if this is potentially setting up a flag. I don't know necessarily if I would, if I would say this is like a head and shoulders pattern, because technically it is not. And in my opinion, it didn't really form this neckline. However, we do potentially have, you can see the high here, and then you can see a little bit of a higher high, and then you can see that lower high over here. So again, it's not perfect, but I mean, I like, maybe you could make the argument for a head and shoulder. I don't know, but in my opinion, I really wouldn't be reading it like that. And I would just follow the trend lines here, in my opinion, because again, I think that this bull flag is potentially forming here, and we can have a pop out here. And I would probably view that, in my opinion, as more of an immediate technical to look at. And again, even if this is a head and shoulders and it does decide to pull back, at least we know now from drawing out our trend lines. Again, this one's from December 12th, 23, connecting to that recent bottom there of March 19, 24, before it had the bounce and started rallying. And we can see if that one breaks down, you can see maybe like 411, right? 413, 415. So we'll first have to break around 445 and then potentially break down there. But in my opinion, again, looking at the book value, the equity was decreasing, so a pullback even to 383 and breaking these trend lines, in my opinion, really wouldn't, it wouldn't shock me. I'll say that, in my opinion. It wouldn't shock me. But here at Stock Charts, very quickly, I'll let you go. RSI was up almost at the 70 benchmark, right? Slowly, you can see it started to step down. Now in this little consolidated zone here, RSI sitting a touch below 57, so we could potentially slowly step down to about 455 and touch this 50-day moving average before potentially bouncing and breaking higher if this is a bull flag forming. But we can see that from that bottom there of mid-March, the stock has run up and has stayed above the mid-Bollinger Band since then. So we'll have to see if we break this 50-day and then try to retest the mid, or if we are, forming that flag and we're about to break out. But the MACD has been climbing nicely the last couple of weeks, potentially starting to curl, but again, it's hard to read because we're kind of bouncing in this little zone here. Let's switch over weekly, see if we see anything. RSI basically middle of the road, sitting here a touch below 55. Yeah, we had that big drop going into March, and then we immediately rebounded. But you can see that really from the time the ball dropped, it looks like the stock has been trying to stay above the 50-day moving average, which may lead me to believe that a lot of people are just consistently piling in because we see some longer-term value here, and we're willing to take some short-term volatility on the chin, so to speak. But looks like the MACD, oh, my apologies, just hit the mic. Looks like the MACD is kind of flat here. 437, 419, 455. Yeah, 419, that would be like there. So, yeah, I don't know. It's kind of hard to tell because we could potentially pop out and then reject and start hitting some of these levels into the mid to lower fours. Yeah, I mean, technically, we are coming off a miss, even though it was a good quarter, and the EPS has been missing the last couple of quarters. So I don't know if it does pop out. I don't know if it would necessarily break out above these trend lines and start to run. In my opinion, I don't think so. But of course, only time will tell. But also, more importantly, look at the volume that's been coming into this stock here just over the last couple of months. We can see this was what looks like January 3rd. Then we fast forward about 5 weeks later here, Valentine's Day, big volume coming in. Now we fast forward about another 5, 6 weeks later, and we can see April 4th, even more volume coming in. Look at that, climbing and climbing. So, of course, earnings again are a gamble, but in my opinion, if they do happen to beat this number, and it looks like now we're holding steady, and next stop is going to be maintaining the 18 to 20 million marks quarter over quarter, in my opinion, that may potentially break the stock out. And of course, if we click here, you can see, look at that line coming out right in kind of this, it's not really a symmetrical triangle, but we're kind of in this little triangle zone here, right at the apex when these earnings do come out. So we could either, break out on some big forecasted positivity from the stock, or we could potentially miss again on the EPS side, and they can try to beat it up and bring it back down here. But in my opinion, I like Flux. I think it looks pretty good in the longer term. But again, in the short term, like I said, 20-25% haircut, in my opinion, really could happen. So if this thing all of a sudden pulls back to like 330, in my eyes, it really wouldn't shock me. It wouldn't surprise me. But we can also see now we're bouncing around in this potential flag, and we can see resistance level here at 484. The company was above it today and then rejected, and it closed down here at 476. So we could potentially see a slight rise back to the resistance, but because we closed below it, we may actually reject and start slowly heading towards this 455 mark. But as you see, technically, if we do fast forward a day or two, around that 455 mark would potentially kind of meet up with the 20-day and the bottom trend line of this current channel that we're in. So that's why even if it does pull back, what's that? It's maybe like 5%. If it does pull back, maybe around 5% to, 455, in my opinion, I really wouldn't view it as a red flag because it's technically still in the zone and it's technically right at the 50-day moving average. So, unless it like flash crashes below it and then closes below the 50-day moving average, in my opinion, I would be bullish maybe potentially in the shorter term. And then 434. Switch over here weekly very quickly. We can see right at a pivot point here, 486, and we were above it for a while, but you can see we have been staying above this 50-day moving average though. So in my opinion, it seems to be kind of stabilizing here around this low 4 level. So in the immediate short term, that could potentially be the lows. And I know that we have CPI data coming out, and honestly, at this point, in my opinion, it doesn't even seem worth it to really analyze this economic data coming out, because even if it's negative, the markets go higher anyway. So, I'm sitting here like a parrot, like, oh, in my opinion, it's too high. We should go down. Buy the VIX, look out for index puts maybe, and it doesn't matter because even when the data comes out and it's negative, markets just chunk up and go higher. So this is why we may really be living through the reverse market crash, so to speak, due to the hyperinflation, but only time will tell. But I like this one. I think it's been growing nicely, and again, unfortunately, there are a lot of red flags: the growing liabilities, the equity decreasing, the book value coming down. However, it all does seem to be it's in my opinion, it's being utilized correctly, even all these negatives that we're talking about, because again, the company just had its best quarter and is forecasting even bigger and better things. So even though we see, the debt slightly increasing, or, oh, look, the shareholder equity is down, again, quarter over quarter, like, yes, I appreciate the fact those are potential red flags. But if the overall business itself is growing and heading further towards net income positivity, and is going to be even bigger and better in 2025 and then better in 2026, then in my opinion, Wall Street will most likely reward it. And, we can see, of course, we could reject if we have a light quarter, and we could stay in this range, because again, these blue lines are the lows from May 22 and the high of about January 13th, 2021. So we're in this long-term symmetrical triangle here. So we could potentially still bounce around, and you can see we're nearing the apex here, end of October, early mid-November of this year, which is roughly about 6+ months from today. So if they decide to keep it in and bounce it around, and then on this good quarter, hopefully for all you shareholders, but if this is a good quarter and they potentially start to break it out from here and start hitting these levels, in my opinion, it would potentially make more sense. But numbers don't lie. Numbers don't lie. And as bad as some of the metrics are, again, the revenue has been growing nicely. So I would probably, in my opinion, I would personally stay bullish on this situation until the revenue shows me otherwise. Right? Or the company randomly forecast, lighter numbers moving forward. But yeah, that's pretty much it. So I'll end it there. Once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But moving forward, more importantly, like I always say, I understand that markets are rocky and volatile and uncertain. So I want to wish all of you success. Hope everyone makes a couple of dollars. Thanks for stopping by. Have a good day.